Hello and welcome to our new Entrant Network Showcase event. My name is Richard Angus. I'm Head of Business Development at Harbin & Co. For those of you who don't know Harbin & Co, we are an independent research and corporate advisory firm with a wide range of public and private clients, as well as fund managers and administrators. We are particularly interested in working with entrepreneurs and ambitious businesses. So we've been publishing EIS research for about the last 5 years. It's freely available to all investors. Please note that we express our own opinions and provide perspective, but we do not offer investment advice, nor should our reports be considered a substitute for your own due diligence. We are also arranging an increasing number of events for companies, managers, advisors, and investors to connect. And this new Entrant Network is a great example. We're absolutely delighted with the traction that we've achieved over the last 3 years with the new Entrant Network. And it demonstrates the value of such a forum where advisors can meet new entrants to the market and share ideas. Of course, these events need a lot of preparation. And at Harbin & Co, we're very grateful for the help provided by our network. And on behalf of everyone, I would particularly like to thank Martin Fox, our Master of Ceremonies, for all his hard work. But before I hand over to him, I'm just going to make a couple of other brief statements. And the first is that I think we are very, very fortunate in this country to have an incredibly strong, ambitious, and talented entrepreneurial culture. Now, of course, investing in early stage companies is a risky business, although the rewards can also be outstanding. These dynamic businesses need to be identified, nurtured, and financed, and the role of skilled fund managers in achieving a successful outcome cannot be underestimated. So investors and advisors need to feel confident that their money is being deployed to obtain an appropriate balance between risk and reward, and to understand also the progress the portfolio is making, so they will be encouraged to invest in further rounds. In business, experience really does count. You do need skin in the game. We believe it's very important for investors and advisors to be able to know the managers themselves and their prior investment experience. We hope you enjoy this event, and now I'm going to hand over to Martin. Thank you.
Richard, thank you ever so much. And can I thank you also for what you do with the New Entrant Network and having created that. It's been going for 3 years, and I think it's an invaluable service. Thanks again to GBI Magazine for hosting this. It's working very well. So let's start. Why did we put on this event? Well, I'm delighted that there are more and more new EIS funds coming to the market. And yet so often, because they're new, people don't look at them because they're unheard of and they have no track record for the fund. And yet in many instances, the people behind it, their expertise, their track record is quite simply outstanding. And they should be of great interest to investors and advisors alike. They just need the right platform to get their message across, and that is what today is all about. Today we have with us 4 terrific companies. They've all been investing successfully in exciting young companies for between 7 and 10 years. All of them are run by highly successful entrepreneurs in their own right, or by tapping into a network of entrepreneurs. 3 of them are launching a fund for the first time. There's EOS Advisory, 24 Haymarket, and VGC Partners. And in addition, we've invited Haatch Ventures to join us as well. They were a new entrant 3 years ago, and we invited them there so you can see just what is possible by a young fund with the right approach and expertise. So in terms of the format for today, we've invited each company to briefly present what they do and what they offer. I'm then going to interview them to dig down a bit into why they're so good at what they do, and then you can make up your own mind about them. So let's get started. And first of all, we're going to introduce EOS Advisory. They're a fund management company based in St Andrews in Scotland, which of course is globally known for the golf course and the university. And there's now a third reason to know about St Andrews. And I would like to invite Mark Beaumont, a partner of EOS, to tell us more about it. So Mark, over to you.
Thank you, Martin. And for everyone who's made time to watch this seminar, I realize there's a lot of demands on your diary, so I'm just going to speak plainly for 5 minutes. I'm not going to present slides. I thought it would be simplest to introduce how we invest, what we invest in, and how we help companies grow, and our new innovation fund, our EIS fund. And I'd encourage anyone watching this to follow up with myself or anyone on the panel for more information afterwards. Clearly, there's a lot more behind the brief introductions we can give today. EOS was founded in 2014, and like so many early stage investors, was initially a group of friends, a syndicate which grew quite organically. It was defined by its geography to begin with, St Andrews, Fife, and over the years that has grown significantly. There's now 60 in the syndicate, and the membership is global. Bringing online our first EIS fund is of significant importance. It allows us to react quickly to investment opportunities. It allows us to work with passive investors as opposed to active investors, and for the first time have conversations like this with the advisory market. So the important thing to remember with seed stage investing is it's very collaborative. We really see the value of co-investing, and each investor has its own strong suit. And EOS Advisory has built a reputation for really knowledge intensive investments in science, in engineering, and in technology. So the focus on life science, clean technologies, renewables, including issues around climate change, food and water security, which is one of the areas we've seen greatest growth and success within our portfolio. And also the final area we invest in is efficiencies in industrial processes, because we believe that as well as being impact investors in sort of future solutions and future technologies, you have to engage with the world that exists, find efficiencies, and as impact investors, we really believe if you're backing innovation that has a global marketplace, then there's significant opportunities and hopefully commensurate returns for that early stage risk. We've had significant growth and success within the current portfolio, and we've had a successful first raise of our innovation fund this summer. That's, if you're watching this soon after we recorded, that's summer, autumn of 2021. And we'll be doing a second raise of the innovation fund April of 2022. And bringing on board the innovation fund is the second significant sort of way that we can invest alongside the syndicate. The third is venture partnerships. That's inward investment from bigger commercial markets, the US, Germany, Japan. And we work very hard to bring in investors at seed stage from the markets that these companies need to grow into. And that approach de-risks it for our fund investors, for our syndicate investors, because you're bringing that smart money to build companies from the start. We're very hands-on investors. We don't just spray and pray. We work closely with our businesses over the years. It is patient capital. We are in for the long term, but we're seeing significant growth within the portfolio. And we'll continue to focus within the areas that we've got that expertise, as I say, deep science, engineering, and technology. Back to you, Martin.
Very clear introduction, thank you. But I'd love to ask some questions, and perhaps I can start with a personal question, because Mark, you are rather well known in another field outside that of EIS and venture capital. So can you briefly tell us about that?
Sure. I always joke to friends that I spend half my life in Lycra and half my life in a suit. I rarely wear a suit, but you see what I'm saying. My former life and some of my time now is still spent as a professional cyclist. I hold the world record for cycling around the planet. I've done that twice, length of Africa. The shortest world record I've got is 10,000 kilometers. So ultra endurance, filmmaking. My background is working with the BBC, CNN, Global Cycling Network, and others. My entire career as an athlete and broadcaster was about performance teams, and it seems like a million miles away from backing RNA diagnostics companies or finding plastic replacements. But at the end of the day, what you're doing is building performance teams on tight timelines, finding the right finance, and giving return on investment to shareholders. So my passion as a performance athlete and my background in private equity, which we've not touched on yet, is what brought me into how can I build a business involved in impact investing, companies that are genuinely making a difference in the world, addressing global challenges. But yes, when I meet people, they normally know me from riding a bicycle as opposed to this side of my work. So.
And I've been amazed at how widely known you are, actually. It's been very interesting. But back to EOS now. Over the last 7 years, you've made, 14 investments. None have failed, and most are showing strong valuation growth. So what is it you're doing differently?
Well, I mean, let's be honest. A 14 not out is not a sustainable track record. I think everyone needs to acknowledge the risks at seed stage investing, but it's not luck that all the companies we are currently invested in are thriving and growing. We don't have time to go through them in detail. I'd love to give you 1 or 2 examples, but I can tell you some war stories in terms of how hard it is working with early stage businesses. It's not the hockey stick growth that everyone sort of promises day one. We've had to work with management teams, change boards, change business models. We've had to completely pivot companies, especially over the last couple of years, to make sure that they're relevant, growing, and have a quick route to market. So the 14 companies we're invested in, over half of them have seen follow-on investment, Series A and B. Let me give you one example. Exemplary behavior and one of our most recent. In 2017, we invested in 3F Bio, which is the company behind what is now called Enough Foods. That's the trading name. With about a year after, so that was a Strathclyde University spin-out. The day it was incorporated, we invested. It went through a Series A year later, which we participated in. We could follow our investment, which is really important. And then this year, market traction with both Marks and Spencers in the UK and Unilever globally has given them the ability to raise a Series B, which was a 51 million euro with a group of Dutch investors. So that's a sort of a 20 times growth from our initial involvement. But I think what belies that sort of headline story is the amount of work with our investment director, with our advisory group, to work with that company over the years. They won't all do that. We've got some fantastic examples. About 40% of our portfolio are in the life sciences, especially blood diagnostics. We've got a strong group of oncology businesses, and they've all got different capital journeys. And it's important that we know how to support them over the long term, but we're typically with them between 5 and 8 years.
Wow, that's a really good answer. Thank you. Moving on, I know that EOS are very proud of their Scottish heritage, and what difference does that make to you?
Well, it's interesting because I actually think being St Andrews founded and based is quite useful, because even within the Scottish ecosystem, most are Edinburgh, a few are Glasgow, but St Andrews is probably the only place in Scotland that people in the US have ever heard of outside of Edinburgh, and it might be because of the golf, but it is a known entity for such a small town, and there's no other investors, certainly like us, from St Andrews. So it is a unique USP. We're very proud of where we're from, but we're not Scottish in terms of our mindset. We see an untapped opportunity to back Scottish innovation. We've got strong connections with the 12 Scottish universities and laboratories, and that's where our deal flow is predominantly coming from. But the way I think about it to myself, it's not an official strapline is deep roots in Scotland, but a global mindset. These businesses will not succeed in Scotland. Our market is not Scotland. This is where our deal flow has come from thus far. And as I say, bringing in inward investment from much bigger commercial markets on day one is a really important part of our business model. And if we can continue to be the boots on the ground in Scotland, especially for these knowledge intensive opportunities, what we're seeing is a lot of other seed stage investors coming to EOS and saying, if you understand this technology, if you can help with the due diligence, then we're very interested to invest with you, because we've got the scientists, we've got the engineers, and we've got that reputation to be able to understand those types of businesses.
Okay, thanks indeed. In your marketing material, Mark, you talk about making investments that positively impact the world. With the current trend moving towards more and more sustainable investing, how do you fit in with that?
Over the last 7 years, our investment focus has tightened a lot. So we've got very clear investment criteria, the 4 areas I described before. And if people watching would like more clarity in terms of what areas we're investing in and why, please do follow up with me, and I'll send you over some information, and we can have a call. Impact investing means different things to different people. To EOS, we are firmly motivated by innovation that can change the world in a positive way. And I mentioned before the fact that if you are addressing global issues, be it around quality of life, disease diagnosis, the example I gave before with 3F Bio is about, can we create enough protein for a growing world population? These are significant challenges. So if you can address those issues in a significant way, clearly there's huge opportunities for investors to see significant returns as well. So that's very much what we're focused on. I don't think it should be a trade-off between purpose and profit. And my experience before joining EOS was in private equity, especially mid-market PE. And I was involved in a lot of deals that were hugely profitable, but they didn't have that impact element, ranging from tonic water through to hair straighteners, fantastic businesses. But my motivation personally as a partner for EOS was to back an ecosystem of businesses that are addressing global challenges. And if I could do that over the next 20 years, that is bringing significant value, not just to our investors, but also in terms of the world's population and the ecosystem.
Again, thanks so much. Last question for you, Mark, for now at least. But what interested me when you were talking was that there was obviously global interest in what you're doing with institutional investors coming in from both Japan and the States. Why is it, do you think, that they're coming to you?
I think Scotland is hidden. I think Scotland's got a bigger reputation than it is in reality. I think when you look at investment opportunities, especially, let's pick life science, the Golden Triangle, London, Cambridge, Oxford, the east coast of northeast of the US, there's a lot of seed stage investors working in these areas, and there's the valuations on those seed stage companies is actually quite different as well. So I think there's an untapped opportunity in Scotland to match the innovation and that rich history for technology, engineering, science, with a capital market that can support, nurture, and grow these companies out of Scotland. So I think we're flattering ourselves to think that deal flow and that commercial awareness is already there in Scotland. We want to be one of a number of organizations who are taking these opportunities to global investors. And I think for EIS fund investors who are interested in the innovation fund, the fact that they are getting to co-invest alongside international investors from bigger commercial markets gives them the peace of mind that we can take these companies into the Far East, North America, the continent, European continent, far quicker. I don't see the value in investing in EIS fund in and of itself or with a syndicate if your only motivation is to invest capital. My job is to bring in that smart money as early as possible, not just so you can open the doors and you can build that blueprint for companies, but also so you've got investors who can follow the needs of these companies as they grow. We need to be able to follow our own investments, but we also need to be able to bring in at the right time investors who have the depth of pocket to grow up these companies in the right markets. And that's one of my key jobs, is to make sure that we can get the best innovation to the right markets as quickly as possible. But that's a job that's still going on. I think we, everyone on this call is interested to make sure that these ideas, bring in investors from the markets that the commercial markets they'll eventually be a part of.
Thanks, Mark, ever so much. You can take your rest now. Can I move on now to 24 Haymarket, and welcome, Paul. 24 Haymarket, can I say, your reputation goes before you, Paul, as a highly successful investor network. and you're very well known in the venture capital world for that. Now, you recently launched an EIS fund, and I'd love to tell you more about the approach and why, and then I'm going to come back and ask you some questions as well. So over to you, Paul.
Great, thank you, Martin, and thank you, Richard and Martin, for organising this. Good morning, everybody. Great. I've got about 5 slides that I'm going to run through. It just gives a bit of an overview of what we do, and then I'll pause there and you can come in with questions, Martin, as you suggest. So maybe just to begin, just a few figures on 24 Haymarket. We've been around as an angel syndicate for about 10 years now, have a huge amount of experience as a lead investor in early stage venture and growth equity investments. From a track record perspective, we have a solid emerging track record of realizations for our investors with a DPI ratio of above 0.4x, loss rates hovering around 10%, and a realized multiple of money and IRR of around 2x and 20%, respectively. And then finally, we've had a recent first close on our EIS fund, our first EIS fund, that will be investing alongside and in alignment with our investor network over the next 12 months. So maybe just to begin with a bit of a background on our investor network. Again, we've been building this very carefully over the last 10 years. We have, at last count, about 120 members spread across offices in London and Edinburgh, with a combination of huge depth and breadth of business experience that runs across industry verticals and across functions within a business. Our investor network is deeply engaged throughout the investment life cycle, and that extends from deal introductions and referrals through to serving on the boards of the directors of our investee companies and helping in other capacity. It's a stable asset with strong continuity and financial commitment to 24 Haymarket. We have a 99% average retention rate year over year of our investor network members, and the average network member has committed £1 million plus to our portfolio companies for the time that they've been with us. And the final reason, which I think extends to many angel syndicate firms, is we believe it's an aligned capital base that allows us the capability to make a difference for entrepreneurs, and that is a distinctive solution when compared to traditional venture capital approaches. Moving on to our investment thesis, this has obviously evolved over the course of time and as we have developed as a firm, but our focus is on opportunities that we believe are underserved by institutional investors, and that tends to be equity ticket sizes starting at 1 million and up to 5 million. So probably in traditional parlance, the Series A market, although I'm aware that the nomenclature around rounds are moving in the current environment, but we really like to put between 1 and 3 million to play of round sizes of up to 5 million. We have a commercial acceleration emphasis rather than trying to take on underlying technology risk. I think the commercial acceleration lends itself to the experience of our investor network members. So we tend to look at B2B opportunities where there's at least £500,000 to £1 million of run rate revenue and proof of product market fit when we're investing. The third part of our thesis is that we have a really strong focus on a curated deal provenance, and this is a deal flow from either our investor network, our portfolio as we've invested very expansively over the last decade, partner firms, and more recently our own proactive outbound research-led efforts. And then finally, from a thematic approach, we're looking across 5 key verticals at present. We expect 80% or so of our investment over the next 2 to 3 years to go, respectively digital healthcare, cybersecurity, supply chain logistics, professional services, digitization, in particular insurtech and legal tech, and finally future of work. And then the last component of our business that I think is worth mentioning is our post-investment model. So the first point to make here is that we are a lead investor. We seek to invest to have at least 10% ownership and lead on the docs. The second and aligned point to this is appointing a member of our investor network to serve as the investor director designate. We feel that we have a huge base of experience within that network, and we're ensuring both relevancy of commercial experience and alignment of interest through material co-investment from those individuals. And then finally, and these are the third, fourth, and fifth points here, over time, we've developed a centralized portfolio support capability that blends both being able to support on areas that we feel are fundamental to commercial development, primarily human capital and sales acceleration. From our network, we get a lot out of them in terms of commercial introductions, and that's one of the sort of key attractions for many companies coming to take capital from us. And then finally, corporate finance support. In the last 2 years, our portfolio has accessed in excess of £200 million of follow-on institutional funding. And we maintain very close dialogue with many of the leading private equity firms and corporate acquirers within the UK markets. And then just to finish off a little bit about our Eis Fund Proposition, I think there are two elements that we feel are, in addition to the points that I've just gone through, that we feel are distinctive to what we've launched. The first is that it is an aligned instrument, so it isn't investing in different deals to what the network are doing. It's coming into the same deals and the same terms. There is a contractually predefined allocation mechanism that determines when and where the fund is drawn down on, so removing any sort of scope for subjectivity. And then finally, and beyond that, there's been a significant commitment by 24 Haymarket principals to the Eis Fund to further align interests. Over and above that, I think the other element that many of our early investors in the fund have found very compelling is the ability to provide direct investment rights. And this is twofold. The first is top-up rights in the event of excess capacity in any deal. And then secondly, we allow our investors in the fund to take up their underlying preemption rights in future rounds before we can fill that with other capital sources. And I think both of those are reflective of our deal-by-deal heritage and the technology that we built around servicing deal-by-deal investing, and the fact that we have a minimum commitment to the fund of 100k per investor. And then finally, we've closed on £15 million in aggregate commitments thus far to that committed capital vehicle.
Thank you so much for that. I'm intrigued because you've done so well as an investor network. So why have you decided to launch the fund, and why now, I guess, is the question?
Yeah, no, I think it's an interesting one. Probably not dissimilar to Mark's answer. I think managing an investor network is a fantastic asset in the sense that it gives you great engagement from your members. It allows you to manage a large portfolio of investments without compromising active involvement. At the same time as kind of investing in a diverse portfolio, which you really need to have at the sort of seed and Series A and even at the Series B stages. But I think the flip side of that, it is not as inherently scalable as a committed capital offering, going and finding a new investor who's going to commit $500,000 to $1 million, over time and doing the deal by deal work. It doesn't have the same inherent scalability, and so we wanted to kind of capture the best of both worlds. I think it's becoming increasingly important when you're playing in some of these larger deals, and certainly as we want to sort of play up to sort of 5 million ticket sizes in the Series A, to have a committed capital base, and that really we see as the ticket to the party in the Series A markets. But once there, our investor network is very distinctive. I think the other side to that question is from a capital provider point of view. Our investor network members are predominantly in their 50s and early 60s. They're at the plural stages of their careers. They're doing this because they want to combine where they're investing their capital with their time and energy and their considerable experience. But we've had approaches over a number of years from people who are probably in a slightly younger demographic, so in their 40s and early 50s, or who are in full-time employment and just don't have the time and energy to devote to deal-by-deal investing, who wanted a passive instrument that could align with what we're doing with our investor network model. So really two strategic reasons for doing it. And why now? We actually started this journey about 18 months ago, and obviously with COVID it got delayed somewhat, but we made some good progress over the summer.
Okay, thanks for that. You also talked about the alignment between the network and the fund. I'm not sure I got that in your answer. Can you just expand on that?
Yeah, sure. I mean, what we wanted to avoid is with managing different pools of capital, we wanted to avoid the scenario where we're using one pool of capital to go into one stage and using another pool of capital to follow on in those particular companies, or indeed say, well, we're going to some deals give to one pool and some deals going to give to another. I think that gives scope for huge conflicts of interest, and we wanted to avoid that. So while we're managing multiple pools of capital from a deal perspective, the company is seeing one investment, and the allocation of that investment between our pools of capital is standardized. So on every eligible deal, our network gets 50%, and the fund gets 50% of the allocation. And obviously we have predefined quality control criteria. For example, if it's a new deal, at least 10 members who haven't previously invested in that company need to be investing, and then only the fund can only match the commitment by those individuals. And in the follow-on deal, you need both the existing investors to be kind of coming in and taking up their preemption rights, as well as validation from a small cohort of new investors. So we feel that the combination of giving a set allocation in every deal to the fund at the same time as kind of defining the behavior set that needs to happen from the existing investors within the network, rather, gives little scope for any conflicts to arise.
Okay, thanks. I know that as a investor network, you involve some of your members where it's appropriate in the companies that you invest in. Is that going to work as well with the fund?
Well, I think the primary motive of the fund is really to be leveraging our investor network and what we've kind of built, in that area. So, we're not planning on sort of pulling in our fund investors. What we have actually seen is a lot of them been coming to us either with deal flow. I think we've got, in our initial 30 investors who signed up to that, we've got 3 or 4 FTSE 250 CEOs who've come into that vehicle, who are obviously very busy guys, but they get deal flow, and when something comes across their space, we obviously share it with them. I think by virtue of the fact that we have carved out a direct investment right for those investors on top of their fund commitments, it gives them the ability to sort of lean in a little bit more, but it's not the same kind of part of the role as it is in the investor network, where our members are very involved and kind of we're engaging with them on a weekly basis.
Okay, fine, thank you. And will the fund be investing in same size deals and market sectors as the network?
Yeah, absolutely. I mean, again, it's all the same deals. The only difference is we're probably putting in a little bit more money now. So if it was only the network who were putting in $1.5 million, we're aiming for £3 million, pound ticket. I think that sort of synchronizes with the general sort of round inflation that we're seeing, particularly in the sort of Series A stage onwards. So we don't see any sort of change in the investment criteria as we move from investor network only to having the 2 pools of capital. And then from market sector perspective, I went through a couple of them. I'd expect 80% of our capital will be deployed in those 5 areas, as has been the case over the last 12 months. But we also want to leave open the scope for any sort of companies that kind of come from left field. So we also want to be a little bit opportunistic at the same time.
Thank you. Last question then. Can you give us an example of one company that you invest in that you are really excited about?
Yeah, sure. Well, I think in general, we're very excited right now around. Well, I shouldn't say we're excited about supply chain disruption that seems to be, sort of hitting many sectors in the economy. It's quite a bad thing when you have a look at the food production and then, sort of food services and many other areas such as healthcare and the elective surgery backlog. But I think from an investment thesis point of view, a lot of our focus over the last 12 months has been going into these supply chain disruptions with the second order effect of COVID, starting with, again, elective surgery backlog and deals. And more recently, we're closing a business in the robotic automation of food picking and packing. So I think the company that I'm probably most excited about of our more recent investments is a business called Circular, which is blockchain-based traceability as a service provider to industrial manufacturing clients. The beachhead market is in the tracking of electric vehicle battery components, which obviously are sort of being mined, many of them lithium and cobalt, in conflict zone areas, in particular in the DRC. That then the components being sent to China for smelting and processing, and then being on-sold to to OEMs here in Europe and in the US, and that has ramifications from both a tracking of carbon emissions from an ESG perspective and knowing where those materials come from, as well as general supply chain management. And so I think to echo the point Mark was making earlier, is we're definitely seeing, even though we are predominantly profit-led, a greater intersection of kind of profits and ESG and purpose, over the last 12 months. But I think that's a company that we're very excited about, and they're making very good headway.
Thank you so much, Paul. That's terrific. We'll move on now, if you don't mind, and come back with our last question later on. VGC Partners, you founded it in 2011. You're a specialist growth investor. You've got a proven track record delivering very attractive investment returns, and you can see why when you've got the likes of Epic Games in your portfolio. You've got a £50 million growth fund, interesting SEIS fund, and you're now launching an EIS fund to bridge the gap between these funds and support the business in your portfolio. Parminder, you're the founder managing partner. The floor is yours for 5 minutes.
Thank you very much. So we've been investing for over 10 years now. Just to give you an idea, our first cohort of deals on a deal by deal basis. We're currently at a 2x valuation and a 1.1 DPI on those deals. So all of our investors have had their cash back. We've got 3 exits left. One is going to be a 3x, which goes in 2 weeks to a large business in New York. And one is a very small investment in a sports agency, which will be exiting in the next 12 months. But 50% of that capital is invested in Epic Games, a 15 billion pre-money valuation. That is obviously the business that owns Fortnite and does $1 billion of EBITDA. And we're projecting a very decent return on that on that particular deal. The valuation since we invested 9 months ago has doubled, and that arose because we led the Series A in a business called Super Awesome at 25 million pre-money, and 5 years later we sold that business to Epic for $275 million. We're currently investing out of a 50 million growth capital fund, which has got institutional and family office investors. It's anchored by the British Business Bank. We've fully invested that fund, and we're slightly different in terms of valuations compared to traditional venture capital, because we're seeing a lot more like private equity than venture in terms of how we approach deals. So from a fair market valuation perspective, that has already been marked up to 3.9x, and we're forecasting that fund will return around an 8x investment when it's fully realized. We are also just in the process of, we finished investing that fund, so we now have a lot of inbound interest for our next 150 million growth capital fund, which is going to be backed by institutional investors. Again, deal strategy is going to be very similar, investing 7 to 12 million checks out of that particular fund. What's been interesting about our business is that we have quite a lot of great operating partners, and we've also exited to some interesting companies. So we exited a business called Silvercar to Audi. We went at 25 million and out at 91 over a 2.5 year period. We've got Temasek as a co-investor in one of our businesses. We got WPP to invest alongside us into Super Awesome. And a year later, WPP became their largest client. And we've also got some interesting partnerships with businesses like ZX Ventures, Nike, and the Publicis Group. And we've also, over the years, built an operating model around the world that allows us to grow businesses across various territories. So we've got warm operational networks and advisors in LA, New York, London, Singapore, and Adelaide to help our consumer brands and media businesses grow across those territories. The team's been together now for quite a long time, so we're a combination of successful investors and operators, and that's quite an important point to make off the back of this slide. So a lot of us have run and grown successful businesses and exited them. So as well as we're people in our team that have worked at large corporates, We've also built, grown and sold companies. So the big USP of our business is operational networks and operational focus post-investment. So culturally in our business, quite interesting, we actually don't celebrate closing deals, we only celebrate exiting, because we understand that the hard work starts on day one when we invest. So we've got people with a variety of backgrounds, either from top accounting firms or consulting firms, or industry leading businesses in the sectors in which we invest. We're also supported by an unparalleled advisory network across the world of people who've been involved in our business over the last 10 years. These tend to be industry executives or entrepreneurs across the sectors in which we invest. So whether it's consumer, digital media, technology, or gaming, we have built a broad network of individuals to support our businesses for growth. A lot of these people end up sitting as non-exec directors or chairman of the businesses we invest in to see them through to exit on our behalf. We tend to take a board seat as a team between us on every business, and we tend to always put in a non-exec or chairman as well alongside that. So where are we investing? So we sit at the intersection of the physical and digital worlds. So tends to be across two main sectors of consumer and digital media. So FMCG products and services, health and wellness and luxury brands within consumer. We're also very interested in sports and entertainment and content businesses within digital media. Obviously, what's emerging for us now is this third element of the metaverse, and using the technologies associated with that part of commerce to drive growth within our portfolio companies, and also investing in that space. So we're very much an omni-channel business. We see the physical world, digital world, and the metaverse through a singular lens, really. And a lot of the businesses that we're growing will be active either from a revenues perspective or a content perspective across those three main areas. So yeah, just to finish off, we're currently investing out of our 5th SEIS fund. So we do $1 million a year of seed capital to understand next generation technologies. We've spent 3 years doing that with the Publicis Group in digital media, and we've now moved over to build a operating partnership with Amazon Alexa, which we got signed off in Seattle about 18 months ago. So we're currently funding voice tech businesses out of the Amazon Alexa program. And then we've got the Growth Cap Fund, which is currently investing sort of 5 million checks. It's going to move up to 7 million checks with the advent of a new 150 million Growth Cap Fund. And the strategy for our business, we're not into unicorns. We're not following that model. We're building great operations. We're growing revenues at between 100 and 400% a year, and we're also generating EBITDA and free cash flow in all of these portfolio companies, because our strategy is to sell to private equity or trade. So we are building really solid, profitable operating models across all of our portfolio. And specifically in the Growth Cap Fund, a lot of people are doing 30 deals in a fund. We do 10, and we do them properly. So there's a lot of deep diligence involved, and there's the selection rate is significant. So we're looking at 1,000 deals a year that we've got coming into the business in various shapes or forms, and we'll be doing about 8 of those across the various pools of capital. However, the gap that we have is EIS. So 500,000 to 2 million checks. We've got a lot of inbound deal flow within consumer, digital media, technology and gaming that doesn't fit SEIS and doesn't fit the Growth Fund. So we're here now to essentially just kick off with a 5 million evergreen EIS fund to help fill that gap. And that's everything. Thank you.
I may just be the only one who's ignorant to this, but I don't get or understand metaverse. Can you explain what that is?
Yeah, sure. So quite a lot of people today are hanging out in the virtual world. So whether it's on Twitch or Discord or wherever that might be, there are a lot of things going on in the virtual world. There are people buying property in the virtual world, in places like Decentraland or Crypto Voxels or wherever it may be. So there are people who essentially have digital twins today, where we have an equivalent of us living in the virtual world. What's interesting about that is that there is a lot of commerce taking place in those environments. So I'll give you an example. If you think about gaming, in-game spending this year in video games is a market on its own, just in-game spending, that is worth $129 billion. So that sort of gives you an idea of the scope, and that's just in games. We actually have people today buying virtual clothing, virtual sneakers. There's a lot of brands now launching products in the virtual world, so you can buy virtual sneakers in the virtual world, which gives you access to those products in the physical world. So all of this is here today. This is not new. This has been going on for many years, and that is a part of the market that's going to be growing dramatically. What's interesting about that is the advent of these new technologies like the blockchain, the advent of new asset classes like NFTs, which are obviously, currently minted on Ethereum, makes it quite interesting because you can trade a lot of these products now in between people in the digital world and also in the physical world. So there's a whole new economy that is emerging from here, which is quite interesting. So we're extremely excited about that and the prospects of that over the next 10 years.
I think it's fascinating and certainly new to me. You touched on it, an interesting partnership with Amazon. Is it Eis Fund? Can you talk a bit more about that?
Yeah, sure. So as a firm, we sort of got a view that we need to be plugged into next generation founders, next generation technologies, and really build our infrastructure into earlier stage investing, so we can understand what's coming next for our various investment funds. But also as well, what's interesting about early stage is that you can build partnerships with large corporates early doors. And we have a lot of people in our space now who want to be partnering with us in some way, shape or form. But we picked Amazon, specifically Alexa, because we believe that voice technology is coming and coming very quickly. However, we now know that there's 200 million plus Alexa devices that have been sold globally, or voice tech devices that have been sold globally. But there isn't really an infrastructure. So if you think about the iPhone, when it was launched, the App Store was there and it came pretty quickly with a lot of software solutions after that to support the hardware. From Amazon's perspective, their skills infrastructure, which is what they call, what is essentially their App Store, is still quite nascent. So they have an incubator program, and we said that part of our funding from the SEIS fund, so maybe, I don't know, 3 or 4 deals a year, we would use that capital and their expertise and bring that together to help grow those voice tech businesses. So that's why we decided to pick them as our partner this time around, and we've had that now for 2 years.
It's really interesting. Thank you. You're starting a EIS fund. How would you sum it up as being different from anyone else?
Well, it gets the benefit of the whole firm, right? So everything that I've just been through with you on those slides, that network is available to everybody within our ecosystem. So all of those corporate partners, all of those executives, all of those co-investment partners, all of those exit partners are going to be made available to the portfolio companies that we support in the EIS fund. So they are getting what you could call the gold standard for operational support and networks within consumer media and technology investing that they wouldn't really find anywhere else. So these are platforms, obviously, that we've built over the last 10 years. So it's just a final piece of the puzzle that we're going to fit in to our overall network, which gives them, a very unique advantage over other businesses. Now, obviously, we're a sector specialist, so we're not going to be looking outside what we do. But at the same time, if we see businesses at EIS stage where we can bring the same amount of, the capital, the contacts, the network that we can for our growth cap fund and the seed fund, then they're the types of businesses that we're going to want to be backing.
Okay, thanks. And last question for now, at least. Can you give us an example of one company that you've invested in that you're excited about?
Yeah, currently. So obviously Super Awesome was the most recent success story, and we exited that to Epic about 9 months ago. But I think now the sneaker resale market's gone mad globally. So it's currently a $10 billion market, soon to be a $30 billion market. You've got multi-billion dollar valuations of businesses in that sector, from StockX to Goat and Flight Club. So there's a lot going on in the space. We've backed Europe's leading sneaker resale business. So it's called Kick Game. It's a luxury brand selling hard to acquire luxury sneakers and streetwear with brands like Off-White, Nike Air Jordan 1s, Yeezys, and so on. We invested in that business a year ago. It had revenues of 1.8 million. It now has revenues of 20 million a year. Current run rate is just shy of 3 million a month. They're profitable, and the business will do north of 50 million of sales next year. So within a 2-year period, we'll grow top line from 2 million to 50, and the business will go from loss making to profitable. We got in at a valuation, our first tranche of money, 6 million. Currently, valuations for those types of businesses are 5 to 7 times revenues. So by the time we get to the end of the journey with Kick Game, we're selling it for north of $250 million, and we went in at 6. So that's probably one of our most exciting businesses to date. We did some follow-on money as well into Kick Game, so I think we own about a third of the business. So just our fund, it'll probably give us 2 to 3 times our fund back, just one deal.
Wow, I can see why you're excited. Haminder, thanks
ever
so much indeed for now.
It's a pleasure.
And
thank you.
Let's come on now to Haatch and Fred. Welcome. Haatch are not a new entrant, if you like, but we invited them here because they were a new entrant 3 years ago and have had quite a time since then. I mean, the partners at Haatch are multi-exit entrepreneurs with $160 million to their name. They started Haatch Angels for individual investments in 2013. And 3 years ago, they started their first EIS fund. They caused a stir in the market by saying they're targeting a 10 times return. They've now got 46 portfolio companies, portfolio value in excess of 400 million. And their first SEIS fund, launched early this year, was oversubscribed in 2 weeks. So you've had quite a 3 years, Fred. You're one of the founding partners. Why don't you tell us a little bit more about what Haatch have been doing?
Thanks, Martin, for the introduction. And it's great to hear from all the other funds this morning as well. As Martin said, we founded in 2013 off the back of a previous business we ran in the online retail sector, which we went on to exit to Morrison's, a supermarket. In 2018, we launched our EIS fund really as an extension of what we were doing as angels. So for the first 5 years of the business, we made 2 investments a year as angel investors, ranging from 50 to 250K each as angels, with great success, and landed our first exit from that angel program in early 2018. Our EIS fund has been growing from strength to strength ever since. So we've just closed our 7th tranche, and our 8th tranche is now open. And as Martin said, we launched our SEIS fund earlier this year. We invest in digital companies, so that's our sole focus. Digital is very broad for us. It's everything from B2B SaaS, so about 80% of our portfolio is software as a service, to new emerging technologies, metaverse, AR, VR, and also some consumer businesses. So we have subscription companies, we have on-demand and gig economy companies. Martin mentioned 10 times return, and I think it's a really good talking point. Ultimately, we're investing in high growth, high risk businesses, and we need to shoot for the stars, and we need to continue to perform at the highest level. And in digital, this is absolutely possible. We've proven it in our angel investments, and now we're starting to prove it under our EIS fund. And our first EIS fund is halfway there at the moment after just a few years, which is great. The future of Haatch is really exciting because over the next couple of years, we're going to continue to back companies at their earliest of stages under our SEIS fund, getting in at the earliest point, 150K checks, leading those deals, which is quite unique in the SEIS market. Then backing them again the stars of those are new opportunities at EIS from our EIS fund, where our average size check is between $500,000 and $1 million now, and we aim to do around 10 of those in the next tax year. And then we're about to launch our follow-on fund. So our follow-on fund will invest at a slightly later stage, so Series A and beyond. And I think a follow-on fund is a topic I wanted to talk about today because I think it's really important. One of our biggest learnings as angel investors for the last 9 years and running a fund for the last few years is ultimately we're investing in companies that are venture backed and want to continue to raise capital. Some of the guys spoke about it earlier, and we're very similar. We focus on companies that are going to generate revenue and have a path to break even. We're not interested in investing in a huge loss-making business. But what we do want to do is invest in sustainable growth, but fast growth. So all of our businesses have a target to grow at triple-digit percentage year over year, and the majority of our portfolio perform to that. The majority of our Series A's and follow-on investments have been led by tier 1 VCs, everyone from Index Ventures to Greycroft in the States. Amazon have invested in 2 of our portfolio companies now, to Notion Capital and other London tier 1s. For us, we want to provide our investors more opportunities to invest. So the SEIS fund enables our investors to invest at the earliest of stages. Our EIS fund is somewhere in the middle, and our follow-on fund is going to be Series A and beyond. That's a bit about Haatch. We're really excited to still be part of this community and still be part of this group. You know, it's great to be a new entrant 3 years ago. It's great to be a new entrant now with our follow-on fund. We're excited about the future for SEIS and EIS, and would love to take some questions from you, Martin.
Can I take you back to 10 times? And because people do talk about that as a target, is it really realistic, do you think?
It's a great question. Digital is, for me, and what we're passionate about digital, and we see huge returns in digital investments all the time. And we see businesses acquired for anywhere from 10 to 100 times revenue multiples, or no revenue multiple at all because they're acquired for IP. So we have proven that north of 10 times is possible in angel investing. Our first angel exit was north of 270 times. You saw that on screen. That was a small exit, which turned into a significant result for us as a business. And we're seeing significant uplifts. You know, our proposition is investing in businesses that are sub £10 million valuation, sub £5 million valuation, and creating opportunities that are 100 to 500 million. So for us, 10x is entirely possible, and we hope to prove the market wrong over the next few years.
Well done, thank you. You seem to be moving very fast. You've done an awful lot in 3 years. How? Why? Because anyway, what do you think?
Good question. So I guess moving fast is interesting. You know, we're on to our 8th EIS tranche now, which is driven by 2 things: one, investor demand, and secondly, opportunities we see in the market. So, you know, each of our EIS tranches continues to be oversubscribed, continues to be larger than the last one. Our SEIS fund, which we launched earlier this year, was oversubscribed within 2 weeks and closed within 3 weeks. We see a huge opportunity to invest at this stage in the market, and we don't see, much to popular belief, a lot of capital coming in at this stage in digital companies. A lot of investors that are willing to lead deals in new entrepreneurs that have MVPs that want to go and scale. So for us, it's not about moving fast. It's about striking, you know, whilst the iron's hot, and we've got the demand. We're seeing thousands of companies a year, and we want to invest in the best subset of them. We want to continue to support them. And as long as we continue to have investor demand and we continue to invest alongside our own investors, so just over 20% of total AUM is always ourselves as partners investing directly alongside our external investors, then we continue to grow as a business, and we continue to go from raising single-digit millions to tens of millions to hundreds of millions.
Thanks ever so much. Okay, last 18 months, challenging for you with the pandemic, I'm sure. How has it affected your portfolio?
I think the pandemic has obviously been dreadful for a lot of sectors in market. I think the one sector, well, there's a few, but I think the sector that we invest in where it's probably had a positive effect is digital. ultimately, we've seen consumers adopt technology like they never have before, and enterprise customers scrap all the rules and go from 18-month sales cycles to 1 month. They need technology now. They need new technology. They need to roll it out. They've ripped up the security handbook. So for us, we've seen the highest growth that we've seen in recent years throughout COVID. And we've seen investor demand like never before. I think a lot of investors that we've spoken to that have come into our fund and others in the market have moved off of volatile public markets and have deployed more of their portfolio into unlisted companies because they want to back the next Zoom, or they want to back the next Instagram, or they want to back the next Epic Games. And that's exciting.
Okay, your turn now to tell us about one of the companies you've invested in that excites you.
I'm going to talk about a new company which we've just invested in from our SEIS fund called Plent. Plent is a fintech company founded by 3 really experienced entrepreneurs, one of whom was the founder of Crowdcube, the largest crowdfunding platform in Europe. Plent is helping the 13 million people in the UK that don't have access to loans to get access to loans, but not based on credit scores, using open banking to provide peer-to-peer lending, so I can lend people in need money for a safe and secure way based on their real affordability, not based on their bad debt history or based on credit scores which don't mean anything. So it's tackling those 13 million people that either don't have access to credit or only have access to rip-off payday loans, founded by the former founder of Crowdcube. We've just closed their SEIS round and really their seed round, I would be honest. We're about to launch into market and really excited.
Thanks ever so much. Last question for you. You've been running the fund for 3 years. Biggest lesson you've learned?
The advised market takes a long time to come around to new entrants, and I think the work that you and GBI and Richard at Harman's doing is really important. For us, we had a track record, we have an angel track record, and we've come into market with an EIS offering, and it's taken a lot of time to bring advisors particularly on that journey. So for me, it's about what I constantly hone in on all of these webinars, and whenever I speak to IFAs, is invest in new businesses, invest in new funds, invest in new entrants. And ultimately, I think the biggest lesson that I've learned is that I want clients to invest, or investors to invest in areas and funds that they find interesting. Mark said it earlier, I think, don't just invest for capital's sake. Go and invest in a fund that's interesting. That might be an angel network over here, or that may be a fund investing in the metaverse, or it may be someone investing in digital like us. Ultimately, I think you should invest for the right reasons. And I don't think there's been enough of that in the EIS market broadly over the last 10 to 15 years. And I think what's really positive about these types of events is you see that changing.
Great, thanks ever so much indeed. Right, as we draw this to a close, I want to sort of circle back to each one of you. You've talked very eloquently about what you do. If there was just one thing that you'd like to be remembered for in closing that people watching this can take away, what would it be? So, Mark, let's go back. You spoke first. You can go first now.
EOS Advisory would like to be known as a significant impact investor. I think you've picked the panel today really, really well, because even though we've all got EIS fund offerings, we're all in that sort of Venn diagram, we're all doing quite different things. And I think Fred said it brilliantly there. Invest in the things through your IFAs, your wealth managers, through things that mean something to you. And over the last 20 months in the pandemic, we've all become acutely aware of global challenges around life science, the importance of science and healthcare, food and water security, how interdependent the world is and how our economies work, supply chain issues, and ultimately, issues that around the climate we live in and climate change and sustainability on the planet. So EOS is very focused on those areas. If impact investing is something which means something to you, and I think there's a big mindset change. Paul said it brilliantly when he talked about different age groups and demographics and interest areas. And I think what the fund gives people time to do is invest in areas that they're passionate about, without necessarily having the time to look at deal by deal investments as a syndicate.
Thank you. Great answer. Paul.
Thanks, Martin. I think from our perspective, we've built a very successful track record around angel investing. By no means are we moving away from that. We want to continue to operate with that very successful model at the heart of what we do. And certainly over the last 18 months, we've seen the support provided by many of our angel investors and our investor network to our companies really be incredibly important to helping those companies really kind of make it through, which some of them has been quite a difficult time. I think from our side, from a fund market perspective, what we want to be known for is our ability to build and invest and manage committed capital or EIS funds in alignment with that investor network. I think it's incredibly important for us that fund investors coming in feel that they are aligned and they're getting the very best that is coming out of our investor network model, and that we can build those two sources of capital in parallel and build the business carefully along that basis.
Thank you very much indeed. Parminder, what have you got to say?
Yes, so the one thing, I think we'd like to be remembered for being a great operationally focused investor. So I think raising the capital and investing the capital is probably the easy bit from our perspective, and finding the deals. It's sort of what we do afterwards that counts. So the corporate partnerships, the executive relationships we have, the ability to build out tech stacks, the ability to drive revenues at a fast rate, followed by EBITDA and free cash flow positivity. So from our perspective, it's all about ops. So whichever stage of investment that you partner with us on, it's the operational side of what we do and the networks attached to that that makes us different and unique within the sectors of consumer technology, digital media and gaming.
Thank you. And finally, Fred.
For me, I want Haatch to be remembered or known for the companies we invest in. Ultimately, for me, it comes down to the companies. I think if you back the right companies at the right stages and work with them very hard, the returns will come and your investors will be very happy. So we want to back the best digital companies that are disrupting the verticals they're in, whether that's in new emerging technology like the metaverse, or whether it's in B2B SaaS, which is our heritage and where we're from, or whether we're delivering groceries in as little as an hour across the UK. For me, it's about making great investments in incredible founders that don't have access to capital elsewhere, leading those deals, which I think is very important, making those deals happen, bringing other investors on that journey and working with them very hard to create an exit. And then investors will be happy and the numbers will speak for themselves.
Fred, thank you. There you are. In closing, can I say, first of all, thank you to all participants. You've been terrific. I'm excited about what you all offer and just what you're bringing to the whole EIS market. So thank you for that. For everyone watching, I hope it's going to help you choose and encourage you to reach out to these companies and actually invest with them, because what they offer is fantastic. Richard, thank you for helping to host this, and of course Sam, and all the work you do to support new entrants to the market. But thank you ever so much indeed.